Earlier this month, American Express presented their earnings, where they beat on EPS but slightly missed on revenue. And year to date, the stock went up 44%, almost doubling the S&P 500. So the question is American Express a buy at current prices? Well, by the end of the video, I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And let me tell you, these price targets are going to surprise you. But first, let's dive into the recent earnings. American Express reported a revenue of 16.6 billion, up 8% year over year. So they are showing that they can grow their revenue at a pretty high rate. However, net income is up only 2%, which is quite concerning to me. You want both numbers to increase at a similar rate. The EPS increased 6%, which is again pretty nice, and also impacted by the shares outstanding. This number decreased with 3%, which is actually a good thing, but more on that in a minute. Looking at the build business, we see that this number is still increasing at 6%. However, it is pretty stuck at this rate. I would prefer a slight increase here. Looking at the US numbers, we actually see a decrease here over time. This is definitely something to keep your eye on. Especially Gen X and the baby boomers are lagging behind in terms of growth year over year. The worldwide total loans and card members are still growing. But again, growth is slowing down here. So this is also something to keep your eye on. Looking at the revenue breakdown, we see that discount revenue, the biggest segment, increased only 4%. So this segment is really slowing down in growth. Net card fees, the third largest segment, is growing at a really high pace, which is something that I love to see. It's the same with the net interest income, the second largest revenue segment. It was also much needed that the net card fees were back on track in terms of growth, since this segment was declining for a few quarters in a row. Looking at the capital return, we see that in total AXP returned 2.4 billion to shareholders in the third quarter, of which 1.9 billion was share repurchases. And this is something that I really like, but again, more on that in a minute. For the full year of 2024, American Express expects to report a revenue growth of 9%, which is on the lower side of their two previous estimations earlier this year. For the EPS, they expect to report on the high end of the previous range. So this is actually looking really good with an expected EPS growth of 23 to 25%. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. American Express is a 192 billion market cap company. P ratio is at 19.5, indicating that they are trading around their fair valuation. Later in this video, I will show you my 3 price targets for AXP stock, so make sure to watch until the end. Revenue is at 64 billion, and in this graph we see that revenue went up in the long run. In the lockdown periods, revenue slowed down a little bit, but as of lately the revenue is increasing at a really high pace again. Gross margins are looking pretty good historically, if we ignore the lockdown periods of course. But ever since 2022, gross margins are decreasing a lot. This is something that I don't like at all. Lucky for us, both the operating margin and net margin are increasing again after a similar trend. So definitely keep an eye on the gross margins here. The EPS is going up in the long run. It is actually looking pretty good to me. Analysts expect that in the coming years, EPS will grow at a 14 to 16% rate per year, which is pretty insane. From 2027, they expect that growth will slow down significantly. But this is based on only two analysis estimations, so take this with a grain of salt. For the revenue, it is also looking pretty interesting. It is expected that in the coming years, revenue will increase with 8 to 9% per year. For a company this big, this is pretty impressive. Return on assets is sitting at 3.7%, which is a low number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 11.7%, which is a great number. It is also higher versus the 5-year average, so this comforts me a lot. Current ratio is at 1.66, which is a decent number. Nothing really special to mention here, to be honest. Right now, American Express has 55 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. American Express has 48 billion in total cash, so they can pay down almost all of their debt. This is something that I really like about this business. They have plenty of cash on hand. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is looking pretty good. But it is not really steady and consistent, so keep an eye on this number as well. As mentioned earlier in the video, shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the P/E ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1%, which is a decent number for a company like AXP. Annual payout is at $2.8. Payout ratio is around 21%, which is looking pretty good. There is plenty of room to grow the dividend, but also to grow the business. The 5-year growth rate is at 11%, which is a great number. On top of that, they have increased the dividends for 3 years in a row. And here we see that American Express did increase the dividends at a decent pace historically. And during the lockdown periods, growth slowed down a little bit. Payout ratio is looking pretty steady to me. There is of course a big spike in the lockdown periods, but that doesn't worry me too much. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a decent rate from here. And overall these dividends look really good to me, but how about the historical returns? I decided to compare American Express stock with the overall market, in this case the S&P 500. Next to that I added Visa and MasterCard. On the 5-year chart we see that AXP crushed the overall market and both competitors with a total 142% return including dividends. It's also interesting to see that both competitors were beaten by the S&P 500 as well. On the 1-year chart it is a similar result, with AXP massively outperforming the competitors and even managed to double the S&P 500 returns. On the 6-month chart it is AXP that is slowing down, and the S&P 500 is having the highest return here. MasterCard also came very close. On the 1-month chart we see that Visa is actually having the highest return, and AXP is having the lowest return. Bottom line, in the past 5 years the AXP was the better choice here. But most recently it is looking pretty interesting, and the stock is slowing down in growth. So could this be the perfect time to buy AXP stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 14, 15, and 16. For the free cash flow margin, I'm putting in 21, 23, and 25%. For the PE ratio, I'm putting in 17, 19, and 21. For the price to free cash flow, I'm putting in much lower numbers to compensate for the free cash flow margin. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, AEXP stock is around $271. I hit analyze, and we see a lot of green numbers. We have a low price target of $205 to $265. We have a mid price target of $272 to $348, and we have a high price target of $360 to $455. And to me, the mid price target is the most justified here, indicating this stock is undervalued. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on American Express is that it is still looking pretty interesting from multiple aspects. Looking at the earnings, I still think momentum is there with AXP, based on the previous quarter, but also on the outlook and the analysis expectations. From a value point of view, things also look pretty good to me. The stock has tanked a lot year to date, but it is still looking pretty good in terms of valuation, especially when they are capable of increasing their margins again. From a dividend point of view, things also look really good with plenty of room to grow the dividend, but also enough room to grow the business. For now, I'm putting AXP on the buy list and see what will happen after Visa presented their earnings. That could potentially impact the stock price of AXP as well. So what are your thoughts on AXP stock? Let me know in the comments down below. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.